You live?
Yeah, you're good.
Okay. Hi everyone. Thank you for joining us this evening. Um, Before we started live recording, I was just talking about performance and sort of level of consistency that we've seen in the last three months of the EA trading. And obviously with that performance, there's been a lot of euphoria, massive growth, and also kind of a lot of challenges for us because we're putting ourselves out there. Um, everything we're saying is maybe a bit different to what other people understand or have ever experienced before. There's a lot of sort of so-called experts that want to challenge us on every single thing we say. And at the end of the day, I'm not an expert, so I'm just happy to go with the flow. And whenever I get scared, I just turn to Sam. So, um, you know, ultimately, I think the real important thing that is important for us to get across is the fact that we're maintaining consistency and working the best part of 16 to 18 hours a day to to give that to you guys. Um, One of the main things that I want to cover tonight is risk, because I don't want people to get carried away and think that there is no risk in what we're doing, because obviously when you win every day and you haven't lost anything, it's easy to just think that you can just be completely blasé. And I think it's important for us to sort of get across that at the end of the day, this is an incredible program, and yet we are still in one of the riskiest markets in the world. Um, and I think when I spoke to Sam earlier, is that he said, he's not the Rain Man. He doesn't know what's going to happen in the future. Um, and what he's worked on is that we know what happened in the past, and that's how the system was developed. And you know in this forex market, there's risk every time you step into the market. And what Sam has tried to do is mitigate that risk on every level, as best he can, because at the end of the day, he is human, and the EA is a program. So I think the important thing is sort of understanding what the risk is and how the EA deals with risk. Um, Most of the time, the biggest challenge to us is people will say, what if there's a 600 pip spike or 200 pip spike or something like that? Well, most of you that are using the EA will know that when it opens a trade, that the stop loss is placed, the best part 300 pips away, maybe from the entry. And the reason that is the case is because on the balance of averages and price movement over the period of time that Sam tested, that was an area of mitigated risk. So placing the stop loss there is an area where it's unlikely, or the probability is much lower, that stop loss will be hit, because that's the whole point, is that we don't want to be taking losses to get to our target, which is pretty much how a standard forex trader will trade. They will have days where they lose profit, which is their drawdown on their account. Stop losses will be hit. They will take losses, but ultimately they hope that their winning trades are more profitable, and they will target making X amount of percentage per month. So Sam's basis is that we know what causes people to lose money in forex trading. We know that even if you enter as a buy, even if it looks like a really good buy signal, or position in the market, whether it's a key level or if it's because there's good volume there, or it's an institutional level, or if you're a forex trader and you're looking at RSI, divergence, all that sort of thing, we know that the second you enter the market, effectively anything can happen after that trade is open. Absolutely anything. And you could, we had a scenario earlier in the month where we opened a trade. It was USD CAD and GBP Japan. Next minute, within 5 or 10 minutes, both of those trades had 100 pip spike against them. And there was no real particular news related to that move. It was day before NFP, and we hadn't experienced any particular sort of volatility like that in our previous live performance. And I think what is probably reassuring is that most of the time in the market, those are the sort of moves that take other people out. I've traded and I used 50 pip stop loss, 70 pip stop loss, 25 pip stop loss. Cheers, Dickie. And the ultimate thing is that even though technically I'm able to look at what the EA is doing and go, oh, that's a good trade, or that's a good trade, or I know the price is going to go back up from that level and stuff like that, or I've got a good anticipation of that. Ultimately, there would have been trades that I took the same if I was mirroring the EA, where I would have had my stop loss taken out and I would have made a loss. And what we've been able to do, what Sam's been able to do, is mitigate that, so that we're, yes, we enter into a drawdown and sort of, looking at, I know we've sort of spoke about hedging and stuff like that. I think someone sort of kind of rightly sort of said that it's more sort of like a position compounding, so that we, as we're getting further away from the original entry, when we get a small retrace, it'd be like a retrace compound, and we then pull back, and a small tiny move gets us back into profit and back out of the market, because at that point the market has gone against us anyway. So we don't want to be in the market any more than we actually have to be, because price could continue on away from the original open position. So I think that's the magic of it, is that the profit targets aren't huge, which means that we're not in the market for a long period of time usually. We can get, like today, there's been a bit sort of quick fire. There was sort of major news, so there's been a lot of spiking, and we got in and out of the in and out of the sort of market quite quickly. I think people ask, what are the chances of me, of the EA blowing the account? And I think I spoke to Sam about this sort of in depth, and I think probably, if there was a market event that was extreme enough to, and I'm talking sort of 300-400 pip move, one thing we've got to think about is that the EA doesn't take loads and loads of trades, and it doesn't stack loads and loads of trades. Like lots of EAs, a lot of greedy EAs will just keep on stacking trades, and they never end up blowing your account. So to actually be in the market when there's an extreme event, you've got to have an open trade on that particular currency pair or related currency pair, and you've also got to have it go against you. You could quite equally have it go with you, and for us, we just get a really quick take profit, and we'd be out of the market. So I think we've got to look in terms of risk, in terms of probability. We've got to look at what are our actual chances of being in the market at that time and have the thing go and have the event go against us. Well, most of the time people are sort of questioning what we're going to do on Brexit. Well, we'll probably have a week off. Be sensible, because by the time there's some Brexit news, that we're going to be able to make a decision and say, well, we've been running for 4, 5, 6 months. We haven't had a losing day yet. We don't need to risk that. And I think everyone in VIP would probably agree. Why be in the market? We can protect our way, protect ourselves by not exposing ourselves in those conditions. And it's like Sam said, he doesn't know what's going to happen in Brexit or other fundamental news, but if we know that something significant could happen, we can manage that risk by saying, push the button, turn the EA off. Everyone doesn't then have to even consider losing money unnecessarily or being in the market at all. And then effectively we can look at it and go, well, the market's all over the show, high spikes. Let's just wait it out until things settle down, and then get back to it when it's going to perform as we expect. I want to sort of highlight, I don't know how many people track the investment account that's been running sort of primarily from the 1st of August, and how low the drawdown is. It's only around 6% in that whole time, and profit is, or the ROI is over 50%. Now, obviously people sort of say, oh, well, someone I think quoted the other day, or whether the drawdown was high on that particular day and stuff like that. So, well, yeah, there was a 100 pip spike against us with no particular news, and yet, it's AUD USD, I think it was, Euro AUD, 100 pip spike in the night while we were all asleep. Woke up in the morning, and I think it was the first time we'd had a move like that go against us. And I woke up and I was like running around in my pajamas, like screaming, texting Sam, thinking, oh man, it's all gone wrong. By 10 o'clock in the morning, it banked profit. And I was like, wow, I was, never seen anything like it. And then I watched another move on Euro USD. It was tanking and tanking and tanking. And everyone was like, yeah, sell Euro USD. And I was thinking, oh my God, we're buying. Like, and I was thinking, I don't know what's happening. It's like Sam just knows something different. And then the next minute, it was at a key sort of level, price bounced back up, boom, we're back in profit again. And I'm just like, the ability of it to handle risk in a way where there's no panic is really changing my perception of the forex market. If I was going to place trades now, I wouldn't. I'll just leave it to the EA, because I don't see any point in taking the risk, because as soon as I place a trade, it's a different level of risk. I say the risk is much higher. I know a few people have kind of tracked the EA a few times and placed trades with it, and they've done okay. I wouldn't advocate doing it, because the second you're in the market, you're opening yourself to risk. So you don't know when the next 100 pip spike is going to be. So you could open a trade, thinking you're being quite clever and copying the EA, and then the next minute you've got a 100 pip move against you, and you've got no stop loss, or you don't know what calculations you need to do to form like a sort of compounding sort of position compounding, and then it's just not worth the risk. And one of the other questions I get asked is, what happens when the EA is compounding its position, if the market just keeps on going and there isn't a retrace that would close it out of profit, and market just keeps going? So the best example I can give of that is the Euro New Zealand dollar earlier in the year, where it moved, I think, about 350 pips over a week or so. And everyone was selling and selling and selling, and everybody was like, yeah, it's definitely going to drop at that level. And it just kept on going, taking out all the sellers, straight line trend. I know at that time there was, you know, a lot of EAs that, you know, sort of like grid EAs that were just selling and selling and just getting busted on losing trades, hitting stop losses, you know, getting within, you know, really small amount of distance to being margin called, and people praying that, you know, that the market moved round. And if that happened to us, say if we got in at a lower level and then the market just kept on going up like that, the EA would recognise that key levels in the market had been broken, and that the trend would most likely be carrying on. What would happen to us in that situation is that our compounding position, the EA would then go, okay, now I've got to perform a hedge and buy in the direction of the market. But those calculations would include the open compounding position. So effectively, it would then look at the lot sizes that it needed. It would open a position, and when the price was going up, all of a sudden your drawdown would be coming down, and then it would hit a TP, and boom, you're out of the market, made profit. Yes, your open drawdown would increase, and you know, that's unavoidable in that situation, but you wouldn't have made any losses apart from the losing positions in the batch of trades, which obviously we, you know, if anyone's watched when it does a compound position, you will see, like, you know, if there's, you know, if we're doing a sale trade, you know, it'd be sort of six or seven trades. The top two or three will, you know, make a loss, but the bottom trades will calculate, and when the market rechases, you'll make a profit. So the fact that the EA can actually handle a move that, you know, that is unexpected, where everyone else is all doing, you know, selling when the market's going up, you know, just because, you know, that's what everyone is sort of keyed in to be doing. And I think Sam sort of hits the nail on the head, is that he said the EA does not trade like a human being. It's different, and that, you know, the calculations that it does is different. You know, if you try to calculate and trade like the EA, you'd either have to be really, really good at maths, like Sam. Every time I talk to him, he's, you know, I talk to him about customers and stuff like that, and he'd work out in his head like a number, and I'm there on my phone, and I still can't do it quicker than him. So he's like a sort of not as attractive Carol Vorderman, but he's, you know, he's a lovely lad. And I think one of the other key aspects is the level and depth that Sam has gone to keep risk low. You know, we know that it doesn't have huge lot positions. We know that it's programmed to understand that NFP exists, and if possible, it will close out positions before NFP. We also know that in those key events, Sam is sat watching everything that's happening. You know, it's not just something that's been developed and just sits on the computer and just runs. The EA is designed to give Sam data outputs so that he can look at parameters and go, well, you know, on Wednesday, for example, IC markets, the swaps are high. So Sam is optimizing to reduce our risk, and in the same way that he optimized on the commission and their data feed, you know, that potentially gained us between 1 and 4% extra a month, and that was without even programming. That's just because Sam has noticed through optimization that he can increase our effectiveness in the market. I know a lot of people have asked, like, why does it not keep on, the take profit? Or why isn't take profit up there and could have made more profit? Well, ultimately, that's because it doesn't need to. You know, where the profit targets are where price is expected to reach without it having to really strain itself to get much higher. And although sometimes price does go on and we could have made more profit, ultimately, the second you're out of the market, you're safe. If you're sat in a market and you're praying it needs to go up another 150 pips or 100 pips to make you profit, then essentially you're trading like a normal retail trader, where you're drawn into the fact that you've got to make X amount of pips to be profitable. And I think there's probably a realization from a lot of people that you don't have to make big pips to make decent returns in this market. What you need to do is to stop losing and mitigate your losses, because everyone can trade and everyone can make profit, but most people can't stop their losses. And those losses are usually more damaging than their wins, because the psychology is that you will let your losses hit stop loss because you are kind of praying that, if it gets within a couple pips or something like that, or I'll move my stop loss lower because it's definitely going to go in that direction. At that point, you're just exposed completely to risk, and you're hoping that the market will do you a favor. Well, I think what Sam's been able to do is take away that, that probability of the exposure to certain types of risk in the market. And I think anyone watching this on a sort of like, if they've been involved for a couple of months. 2 seconds. Scott, have you noticed I've disappeared, or my screen just went blank?
No, you're still there, mate.
All right. Okay. Yeah, I think what people need to understand is that the EA isn't perfect. Risk still exists. This is the financial markets. People need to remember that, even though we've been very successful, what Sam has sort of said is for everyone to sort of just, not get carried away. Don't turn up the sort of, the risk settings. Don't try and chase the market. Be sensible, have a financial plan, look at, certain points of targets and withdrawing some money. We have got other products that are being developed. I think everyone's quite aware of, potential of gold EA, which comes with, incredible returns. But with those returns comes greater risk. I think when we get to that stage as a company and we're able to launch, there's got to be, quite a stringent plan on how people operate, because although there's good potential there, what we don't want to see is people get carried away and then 1 month lose money which they didn't need to lose. We have got plans for people, once the gold EA is released, to invest their first investment, and at the end of that first month take that initial investment out, and then basically after month 1 they're just working with venture capital, and you use that venture capital to increase your compounding on your investment account, and then have a little bit of money to just have something in your hands so that you feel that you're getting something out of that, so you don't have to withdraw from your investment account, and then start again with like £1,000 again on month 2. Ultimately, what Sam said is that potentially Gold EA could run 9 months, 15 months, 24 months without blowing an account. But potentially 1 month it could happen. The risk is there. But by that time, you could have made 50, 60, 70,000 pounds and also increased your compounding on your investment account. So it's about being clever with money and keeping money moving to make more money. And effectively, someone's asked what's the forecasted release date, Dicky. At the moment, Dicky, it's going to be next year. Sam is working on it. The testing, I know that even if I gave Sam the money today, he still wouldn't let me. He wouldn't use it live. It would help him if he made that kind of money. It would help everyone, but he will not go against his testing and how stringent he is about making sure what he does works. So what you've all got to imagine is there's one programmer in this group that's created this, and although me and Scott are, quite active in the groups, and we hold these webinars and stuff, but, ultimately the biggest pressure is on Sam's shoulders, and effectively, I was sort of chatting to him today, is that sort of chance in the future Sam is going to step full time into being Auto Forex Trading's full time programmer. So not that he's going to be sat at his computer 9 hours a day, but what it means is that he's going to be able to step up development on certain products, and what that also means is there's going to be some improvements on the current EA, because, like Sam said, it's not perfect. And that might be to minimize risk a little bit, or it might be to take advantage of opportunities that he's recording at the moment. Just noticed we've got 10 minutes left, so could Pete's asked the question, is Gold EA likely to arrive before crypto? Yeah, crypto's not really on our radar. It's potential. It is in blueprint, and there is testing, but essentially Gold will be our first launch, second launch, and crypto is likely to follow that after that. Scott's just going through. Has anyone got any questions they want to ask? They want to jump in now. We do a quick 10 minutes. I know Gordon's always got questions. Come on, Gordon, there's got to be something.
Dickie asked if we're aiming for one on oil. As far as I'm aware, no, it's not been mentioned at any point by any of the team, especially Sam. So I think first of all will be gold, followed by crypto if it's possible, and then after that, who knows? But with no idea.
I've spoke to Sam. He sort of said, there's obviously DAX and a few other different things that he can do. I mean, essentially, in Sam's own words, is when he's got the freedom to sit and program without the pressure of having to work like he's having to at the moment. Ultimately, he feels that would be his time to shine and show everyone what he can do. And all we can, I don't even know the levels, what he can do. I just think that it's an incredible opportunity, and it's really just a mental privilege to be part of it. Like all of us, we're just all normal people, and I think, I get to chat to quite a lot of people, and I get to get quite a bit of feedback and stuff like that. And I know that this is life changing for everyone, and we've all got families and children and debt and bills and all that kind of thing. And I think really it's just a really special time. And we're also very, very humble, and grateful for the support we get from everyone. Some people really do sort of put a lot of effort into helping us, and it's it's massively appreciated, because we're all pretty tired. There's only there's only a few of us, and we're really busting a gut to do what we need to do to perform at the level we're performing. And the sky's the limit. We want the best for everything. We're not greedy. We just want the best. And I think it's nice that in the likes of I see quite a lot of competitors that make quite snidey comments about us, but it's almost like we're doing the right thing. People that are bringing in the stories that people are sort of demonstrating. It gives everyone a lift when people are really motivated and going, yeah, I'm going to do this, I'm going to do this, I'm going to invest this. People got some goals to work with, instead of just I've still got my 9 to 5 and I might get a promotion. Be able to go to people, you've got an ability or opportunity to kind of almost step up yourselves, and at the end of the day, I can't make anyone do anything. You can all just sit there and just let the EA do its thing. But if you look at this in terms of an opportunity, as a business opportunity for yourself, you've got the opportunity to do really well out of our business, and come in under our wing, get all of our support, get our expertise, build up a portfolio for yourself. I just don't know where anywhere else this exists. You try and Google it. If someone else can find it, then they're probably copying us.
Just to answer Rob, I suppose that it does come under risk. It certainly comes under risk for us as a company. An email has gone off to the CFTC and SEC to clarify our position in regards to US customers. Once we know any more, then there'll be an announcement on it. Until that time, I can't tell you anything else because we don't know ourselves. Hopefully they'll come back and say that we're, not doing anything we shouldn't be, or, we need to be registered and this is the process. But until that time, we haven't got an answer for it, other than we're seeking clarification.
Scott, let's check that last question because it's above my.
Yeah, so Jim, when you sign people up over the course of a month, it doesn't really matter whether they're staggered. If you hit the next tier by the end of the month, then you're in that tier then for the payment. It's not sort of staggered. I don't work out on dates of everybody, and you earn 12.5% on this customer and then 25% on that customer. If you reach the next level of the tier, then the next time you get paid is what tier you're getting paid
at. Lee Fisher's signing someone up. He's packing the pennies, that lad.
So Goldie A, again, once we know the level of, once the testing's been done on gold and Sam has decided the best route for it on how it should work, we can then look at the best route for it to be sort of given to our customers to use it. Whether that will be through IC Markets, whether it might be through a different broker, that I honestly couldn't tell you. Until we've got all the results from Sam's testing, all we can tell you is that it's going well at the moment. We've just purchased as a company more modelling data for gold, you know, so that he can test it further and further and further. You know, so until we've got the full results and he's happy with everything, I'd like to think it will be done through IC Markets and STT, or even potentially by that time even our own custom software, you know, which will do everything that we need it to do for us and for you guys.
Yeah, we're looking at that, Ellie. The sort of custom software we're looking at the moment is working with a company that also lets us do white label and programming, and we want to automate all of the sign up process. And when someone signs up and they're connected, they get an email to say, you know, woohoo, you're connected. You know, for it to include ID numbers and link it to the, you know, the partner. Everything that really as we move along and we grow, we're going, well, we need to do that better because Scott's brain's getting fried. I mean, look at him; he looks really upset. We just want to make everything as smooth running as we can, because, you know, we've got a great product, we've got a good active team. Sam's you know, someone just sort of said
less than a minute left, so just run through that quick. Sam has stated in a chat, for those of you that are rewatching this and won't see the chat, the current update is gold has done 1,000 to 41,000 in 5 months, peaking at 26% drawdown. And the crypto EA that he's in the process of developing and testing did 1,000 to 20,000 in 3 months, with drawdown hitting 42% at his peak. But those figures will change all the time as he continues to test. So yeah, great results, but obviously increased risk on that. So you know, which was the part of this meeting, was to discuss, you know, trying to keep risk as low as possible